This is Gilbert Gelada. I'm talking to you here from CPLSPA downtown Orlando. This is Tufts on Tax, where all your tax questions and answers are right here with Mr. T. Scott Tufts. He can answer your questions. You can email him at stufts@cplspa.com. That's stufts@cplspa.com. Or you can call him at 877-647-7887. Again, 877-647-7887. And we have that number actually on a 407 as well. Hello, Scott. How are you?
Good to be with you.
Good to be with you too. Now, today we're talking about a subject that we didn't touch before. Maybe we mentioned it in some of the episodes, but not really the main topic. BBA Partnership. What is that?
All right. So we're talking about the type of partnership entity that is a type of partnership that will be referring to a partnership entity that is getting audited by the IRS. And so our audience needs to know that a BBA partnership is something that every partnership has to determine whether or not they are a BBA partnership, because this gets into the important aspect of a partnership representative, which we've mentioned in the past, replaces the prior term tax matters partner. And remember, for tax purposes, we include in a partnership an LLC that has more than one owner, that is defaulted and becomes is a partnership for tax purposes. In other words, we group an LLC that has more than one owner, or member as they call it, as a partnership, as well as a joint venture. Anything that has two or more partners or owners or persons with an economic interest that meets the definition of a partnership under the tax code. So that is why LLCs are kind of an oddball, because LLCs can be partnerships. They can be, if they only have one member or owner, a disregarded entity, or they can elect into corporate status. And we've talked about that. They can be a C Corp or an S Corp. So it's kind of complex, but the bottom line is we're talking here about a particular type of partnership that under the code has to be audited a certain way. So what we're talking about here is IRS wants to audit a partnership. That's the Form 1065 partnership return. If that happens and it's a BBA partnership, then the person that they will talk to is called the partnership representative. On the page 2 of the tax form, you actually designate who you want that to be. And yet, once you get to your tax return and you're preparing it, you're kind of hoping that you're exempt or you're opting out of the BBA partnership rules, so that you're not bound by those rules. And so if you have less than 100 partners, you're hoping that you are not bound by the BBA rules, and then they'll have to audit you individually, all individual partners. So it's a very important thing. It's an important concept. And what we're focusing on and get the word out to folks is they need to understand, well, am I a BBA partnership? And what can happen is that you can have a LLC and one of the owners members be another LLC or partnership. In other words, you can have folks who put together a tiered structure. And the next question will be, even though there's a rule that would say a small partnership should not be bound by these rules, an exception to the exception is that if they have one of these tiered structures, and therefore that might bring you back into the BBA partnership. So all this gets answered on your tax form, and your preparer or professional that assists you needs to advise on that. And then in your operating agreement, you need to have provisions that deal with that possibility to flush out what the roles and who will be the partnership representative, what process will go into selecting that partnership representative, and the duties and responsibilities for that.
I want to ask, let's go first, what BBA stands for?
Sure. It's the Bipartisan Budget Act of 2015. Okay. So way back in 2015, they enacted this change that repealed TEFRA, which was the old way that they audited partnerships. And then they put it into play that within 2 years it would be effective, and then effective in 2018, it officially put the end to anything called a TEFRA partnership and replaced it with the BBA partnership regime. Now, what our folks need to, or our audience needs to know is that, I mean, let's just kind of get it to the blunt level. Mm-hmm. If you see the term tax matters partner or TEFRA or in your agreements, you should know that those are obsolete provisions. And you will want your operating agreement to be updated to use the terms partnership representative and BBA. Okay. And then the other thing is, this creates a situation where, and we have talked about this, where the entity itself, when it gets audited, might be in a situation where if there's a underpayment of the income, meaning that there's an understatement of the income on the partnership return, that the partnership faces, or the LLC faces, the possibility of having to pay the tax. So the old days used to be they track down all the partners, and they use they use the tax matters partner to help in that process. Now they're using the LLC entity and the partnership rep as a possible tax collector. So think about what I just said. That's pretty startling. If your LLC entity is potentially on the hook to pay the tax, even though the entity always passes things through with a K-1, that should be like, uh-oh, right? Because now the entity level, the entity has incurred the tax because of an audit, and can, but for pushing it out to the members, might have to pay the tax. Okay? And then seek, obviously, because if they have to pay the tax, what is the arrangement with the members or partners to deal with whether they're still, what happens if partners have left and it's for a year when they were involved? What do you do there? So, again, we don't, obviously it's complex, but as you start to put it together, you realize that this is an important change in the way things are dealt with. This affects how the IRS will view these partnership entities and approach them, and also critical as to know how this affects the parties. Because even the simple example of someone taking their partnership interest or membership interest and transferring that into a revocable trust as part of their probate planning, or to avoid probate, even that estate planning concept, which is pretty basic and folks do that, let's assume they go to transfer. One, do they have permission to do that? Two, under the agreement. Two, do they have, if they do have permission to do that, when they do that, are they aware that they've now created a BBA partnership? So let's just take a simple example. If you and me are in a LLC, I decide to do some estate planning. I take my 50% interest, let's say, and put it in a revocable trust for estate planning purposes. I have now created a BBA partnership, whereas before, when we were individual owners of that, or members of our LLC, let's say, we would not have been. Okay? So that simple task of doing that. Or let's say that you wanted to, when you're 50-50 with me and you're the money person and you're investing, but you're not active and I'm the manager and I'm running it, you want your money protected and you want to have another layer of liability protection. So let's say you invest through an LLC vehicle or a trust vehicle that you throw the money in, and that's how you're holding that interest, maybe even a family trust or anything. That will create a BBA partnership, even though it's only two.
So when you get into the partnership, you have that in mind. When we're getting into this partnership, it's going to be a BBA partnership.
So,
is that how you think of it?
Well, there'll be provisions in it. Remember we talked about how thick the operating agreement usually is?
Yeah.
And we said, well, why is it? Well, buried in that thing should be provisions handling what happens if you're audited. Right?
Okay.
And if you're audited, then inside that section, you're going to have things like who handles the audit, and so forth. Now, the other part of this is who handles the distribution of the K-1s and when they come out. I've seen agreements that get into those details of when members can expect to receive or partners expect to receive their financial information, meaning, the prior year's activities, meeting in terms of discussing the prior year and how things went. Well, a lot of times they'll try and prescribe a date 90 days after the end of the fiscal year or whatever it is when they'll get the information necessary or even the K-1 to prepare their own return. Now, others don't have that in there and go all the way to the extension time to even give out the K-1s, which backs up the partners from being able to do their own return.
Oh, wow. Maybe.
I mean, we talked about how 8082 can be used to file in advance when you haven't gotten a K-1, so it's possible to use the 8082 for that purpose, meaning you haven't gotten a K-1, you know what your numbers are going to be. Let's say for whatever reason they can't prepare the K-1, you then say, I know what it's going to be on there, I'm going to go ahead and put that 8082 together, put it with my return because I want to file. Okay?
Now we have something else we wanted to talk about, final rules. What is that all about?
All right, so if the BBA partnership provisions were enacted in 2015, that's what BBA stands for.
Yeah.
And I said it had kind of an effective date of 2018. And they put out proposed rules. It should not surprise anyone that we're finally getting final rules on the nitty-gritty of how it's going to work.
I see.
So this is final rules that the IRS has now said. We've had enough time for people to comment and say what's good and bad about our proposed rules. Now we have final rules that will prescribe very clearly, hopefully, how the IRS approaches some of these nitty-gritty issues, which would be things like how should the rules work in various situations? What do you do if you have a tax-exempt partner or member in an LLC or partnership? What do you do there? Because I've said that you impute a tax bill, they don't pay tax, so then how is that going to work? A lot of complexities come up, and these rules are aimed at addressing those.
So this came out 2015, and now after 7 years?
Yep, you got final rules, and those rules have just come out. So we're getting the word out that now it's final. Now there's really no opportunity to say, well, we didn't have enough guidance on how this works.
So you got 7 years to figure it out. Okay.
So basically, we can view this, and our audience should view this as it's showtime. So if the entities are getting audited, there's procedures. I will say there's also IRS guidelines, procedures, rules that guide them, because this is new for them too. So they have to have the designated personnel and IRS employees and who know how to audit these things. And so what we need to know is that if the entity gets audited, the first question's asked, is it a BBA partnership or not? Okay? And I think that's pretty clear. And if it is a BBA partnership, then the person in charge of making all decisions is the partnership representative. So whoever you've designated to do that, and it does not have to be a member, can be anybody. So whoever you've prescribed, and if you've tried to put that on the tax form, that's who the IRS is going to look to as the partnership rep. So who wants that job?
I know I don't.
Right. But if you and I were partners, do you want me handling the audit, or do you want to?
That's a good question. And usually people...
Or someone else, a third party.
Or a third party,
yeah. So, and then who wants that job, then what also...
Can that be a CPA?
And what trouble can they get in if they're in that role? Right? See, so if you're a professional or an accountant, you can always consult and advise. You don't have to be the fiduciary itself.
Can they put an attorney like yourself?
Yeah, but if you do that, the attorney then does that attorney then get an attorney?
Ah, okay.
See what I'm saying? So we want to be sensitive to the idea that, you get advice in these roles, and then you're this role, right?
Yeah.
It's like trustee of a trust, executor or personal representative of an estate. You see what I'm saying?
Touchy.
Yeah.
It's can get crucial.
Right. So so when you're setting up your LLC or partnership, or you're doing the agreement or an amendment, this is critical to get after right now that we have these rules, final rules, and so forth. So if you've got your operating agreement and it's been, it was worked on a number of years ago, take a look at it. See if it's changed. Yeah, and then get with the professionals who either did it before or get to someone like myself who can assist in drafting these amendments and things like that.
Absolutely. So you heard him, folks. If you have any questions or if you have in doubt, as we always tell you, get with a professional like Mr. T. Scott Tufts. Let him help you in these things. Don't do it on your own. If you're not sure about it, you can always call him at 877-647-7887. Again, 877-647-7887, or you can email him at stufts@cplspa.com. It's stufts@cplspa.com. And I realized this is our last episode of the season.
Well, so there you go. So next season we will constantly tinker with this to certainly help our audience get on top of these tax issues that are especially focused on how these forms can create problems and litigation, and then moving forward also occasionally being able to sit down and talk with other professionals, get to know what they're doing, and then also stay on top of these current developments, what's happening that we want all folks to be aware of when it comes to taxes.
Yes, absolutely. And a whole new year coming up. So again, you can always call him if you need help with anything, 877-647-7887, and we'll resume back in January 2023. Thank you and have a wonderful year.